Well, good afternoon, investors. Welcome to Bull Sessions with Mark and Ken. And we are joined by Kevin Galogly, one of our roundtable presenters this evening. And Kim Butcher was going to try to join us, but I think she's scrambling a bit and will be there tonight. So welcome, everybody. It's a blustery, gloomy day in southeastern Michigan. Ken, how are you doing?
It's dark. It's like twilight up here, Mark. Same thing. We have a little bit of smoke in the air from our friends up north, and on top of that, there's just clouds everywhere. It's been raining off and on all day, so like I said, it's like twilight right now.
Well, speaking of twilight, that slide is from Detroit. And every 4th of July, there's a pretty magical celebration of joint fireworks between the city of Detroit and Windsor, Canada. And it's a pretty good show. And that's
It's
just
called the Freedom Festival. Canada celebrates Canada Day on July 1st, so it all fits together real nicely. Natalie and I have been down in some of those high rises during that celebration on various years when we've been attending NEA conventions and things like that. And it really is a spectacle. I'll tell you, it's every bit as large as that festival they put on over New York Harbor on the 4th. So it's a huge extravaganza of firework.
Yeah, and I'm not a big fan of the huge crowds, and when you're elbow to elbow, and we're talking hundreds of thousands of people, not necessarily my thing. So we've only done it once, but we might try one of those balconies at some point in the future. And contrary to popular rumor, Ken, your head and my head have never been part of a Thanksgiving Day parade or anything like that. Those are not balloons from a parade. Although there's probably a few people that would be willing to contribute to that effort if we gave them the chance. All right, we're going to go ahead and finish up what I think is kind of an interesting portfolio to watch, this Electrifying Future demonstration that we've put together. And then we want to just kind of go back and remind about some of the other demonstration portfolios, some of my favorite slides, of course. So let's go ahead and get underway, Ken. Okay, here's our reminder that Portillo's is not a sponsor of this program, but they should be. And I am now, since I didn't put up a picture of a salad from Portillo's, I now am up to 6 or 8 contributions from all of you guys out there. So this is their chopped salad, apparently. So they do have a variety of salads for those of you that thrive on that sort of thing. So it's not just hot dogs.
It doesn't look like much of a salad. Big pile of meat and cheese.
I am a shareholder in this company, so Ken, so bite your tongue.
Okay.
All right. You guys all know the drill. We see a lot of familiar names. Welcome back. No investment recommendation is intended whatsoever. This is about education, demonstration, and basically taking some philosophies, methods, techniques, analysis, discovery techniques, all that sort of thing, and demonstrating them here. This is all for illustration, basically illustrating what we consider to be 8 decades of very interesting results achieved by many. There are no guarantees in this business. You guys all know that, but a number of our colleagues have experienced extremely interesting, successful investing over the years. Please do your own homework. Keep in mind that we might own some of these. I just admitted that I own some Portillo's. Not a lot of shares yet, Ken. So if you guys want to drive the price down for us to accumulate, we'd tolerate that. So we will try to let you know if we own something that we're talking about. And we also believe that you are smart enough to form your own opinions and make your own decisions about investing related resources. We do have our roundtable tonight, so we'll probably try to wrap this one up pretty quickly. If you'd like to be added to that monthly event reminder list, send an email to ncavula1@comcast.net, and she'd be happy to do that. If you have any other follow-up questions, our 2 email addresses are right there in front of you. Good to go, Ken?
Good to go, Mark.
All right, we actually had a little bit of motion on this slide. It had been stuck at 13.3% on the value line median appreciation projection for the better part of 9 months. wiggled and waggled around a little bit, but it did settle in at the end of June down to 12.5. And what's interesting is that little thing up at the top there. We actually had a little bit of a relaxation in the overall prices. We actually had a little bit of a rough day a few days ago. Been kind of slow for a couple of days. So the stock prices actually came down on average, and so did the forecast. There's only one way for that to happen. That's if the rhinos are backing off on their expectations a little bit. So we are seeing a little bit of that right now. And the quote down at the bottom has been modified. I actually sent this to Ben Carlson this morning, and he liked it. And because I think it works in both directions. Your thoughts, sir?
Well, I've liked the quote from the first time you put it up there. It makes absolute sense, and stock prices fluctuate. That's one of my favorite quotes. Mark, that green bar isn't cast in stone yet. We still have 3 or 4 more days in June, right?
Yeah, but Value Line works a few days ahead, so that kind of locks it in. There,
Okay,
the
got
current
it.
edition of the Value Line Standard edition is dated June 30th, so we use that.
Okay, I got it.
It's sort of in there. All right. So again, we think that that light blue line is important, and that anytime you're below it, you should shop. The farther below it that you are, you probably should shop even more fervently. And we do regard this period as a period of very unusual stimulus, and kind of one of the more unusual moments in stock market history, really, for over a year. All right, so we'll keep going. This is one of Len Douglas's favorite slides. I think Len may have sent this to me. Just pointing out that a fairly small number of companies account for over 50% of the value of the NASDAQ 100 exchange traded fund. And they were recently joined by NVIDIA, which has had quite a climb. But you can see some of our good friends there: Microsoft, Apple, Alphabet, Amazon, Facebook, now known as Meta, and Tesla. But again, over 50% from just those. And the performance of that group of 100 stocks is shown on the right. So you can see a pretty good dip there. Pretty good. And that's kind of what we're talking about. They probably fell a lot more than they should have. And I'm doing air quotes, Ken. And that accounts for some of the recovery. In fact, I theorize that everybody's blaming AI and all that stuff. Well, the AI stuff has been going on for years. I think it's an excuse. I think it's more a rebound for many of these companies, and it's influenced by AI, but that's not the major reason that we're seeing this run over the last several months.
Yeah, this graphic is dated, Mark, down there in the lower left corner. It's a kind of a funny syntax to the date, but I think that means April 19th, 2023, I think is what it
That's
means.
European.
Yep, it certainly is. But there has been some movement in the tech stocks since April 19th, but I doubt if the general 50-50 rule has been broken very much either way in the
Oh,
last 2 months.
I'm sure it's still there. In fact, NVIDIA is even farther up this chart than shown here then.
Yep.
All right, good stuff. I just left this one in here. A lot of you have seen this before. If you're new to this session or you're listening for the first time on YouTube, this is just simply a quick look to remind. Again, the mystery for me is, what do we spend all our time worrying about if all of those down markets down here are so insignificant compared to the green? And then again, the numbers on the right from our favorite slide, they've only gotten better since that slide was last updated. Microsoft has taken off, and the loss for the 250 losing positions has gotten smaller. So that's gotten smaller. This has gotten larger down here. It's actually an even more powerful story.
Yeah,
So again,
that number is 78,000 plus now, Mark.
yeah. So good stuff. Again, this is a pretty good slide to consider putting in front of a group of seekers if you're thinking about forming a club or encouraging that sort of thing. And I would argue that when we go over the portfolio summary, or that we're going to look at towards the end, same thing applies. Quick look at our groundhog. I've almost fallen off the list, so I'm just going to go on mute now and let you take it away, Ken.
I think we have a real what do you call it down in Texas when you got two of them fighting? It's not a barn burner, but you got a real contest going between Matt and the Lone Star Club now. That's what's that? A little bit more than $2,000 between
Fla-
the two of them
how
now.
about flaming
That's just
tumbleweeds?
that's just one day's trading up there at the top two spots, and Ginger is not out of this by any means at this particular time. I'm just going to stay real happy at number 16 and hope that it quietly keeps moving on up. That's all.
Yeah, see, Kim has dropped down to 40, and I've dropped down to 38. We can blame some of that on our Delics. So that's part of it. But yeah, interestingly enough, Kathy Wood has moved up a tiny bit to 89th. Again, we point out that the value line arithmetic average is probably in worse condition over these, what are we at, 8 months? Over these 8 months that we've seen in a long time relative to the Wilshire 5000. Keep in mind that it is actually fairly normal for the value line arithmetic average to beat or be ahead of the Wilshire 5000. And certainly not the case, at least not yet. The monkey continues to drop. He's in the basement and he's threatening to find the floor, Ken.
We have 3 or 4 of our audience members telling me that Matt's portfolio is down for the same reason that your portfolio and Kim's portfolio is down. Matt has Ardelyx in his portfolio. Lone Star, interestingly enough, does not have
Uh-oh.
anything like that in their portfolio. So it'll be an interesting, what are we, about 6 months away now from the end of the contest, about halfway through?
Yeah, we would be, well, oh,
Yeah,
you're
a little
asking me
bit.
to do math out loud. We're
We're,
7 months,
we're
7 months
even
away. We're almost
we're
halfway.
yeah we're almost we have a month left before we reach the halfway point. So this is anybody's game up near the top there.
Still pretty early. Still pretty early, but Lone Star has to be considered a clear and present danger.
And it's really nice to see, Mark, the top 40 all beating the market at this time. That
Oh, yeah.
that should that should be mentioned, and trumpeted from the rooftops.
Yeah, I
So
mentioned that a year ago, those numbers were all in the 800s. So that just shows you a slightly different thing. Speaking of things that are slightly disappointing, our best small companies for this year continue to be a tiny bit disappointing. We did have fairly decent recoveries in Yeti and Monolithic Power in the past week, a little bit with Fox Factory. And I think many of those are your picks, Ken. So the green at the top, I'm pretty sure you did pick Technoglass. If I tried to claim it, I'm sure Ann Manning would correct me after reviewing the transcript. So I'm
well, I know
looking
that
for that.
3 of them are my picks. I don't know. I know that Technoglass, Yeti, and Fox Factory were some of my choices because I happen to own all 3 of those. But I didn't know very much about Monolithic Power, which is dancing real pretty right now on the list, and a couple of the ones I own down near the bottom of the list are not performing very well. I also own Malibu Boats and In Mode, so they're plus for the year, but they're not making money. So
And as I mentioned, I do own some Portillos. Looking really hard at MP Materials. I want to believe that the analysts are wrong and that we may have an opportunity there. And as I told you earlier, Ken, Service First is on my short list for tonight. I have not decided tonight yet.
yeah, I own Service First through a club, Mark, and we're just holding our breath at the moment for the company. It doesn't seem to have any real flaws attached to it, other than the fact that it's a medium-sized regional bank. That's what seems to be the hiccup for it right now.
Yeah, I think they're well distributed, well diversified, and their deposits don't seem to be in jeopardy. I can't figure out what somebody thinks is wrong with it. So it'll I'll take a closer look and see if I end up there. But again, this is also pretty early. We have until Halloween for this to rectify itself. All right, so let's jump into and wrap up our discussion on our electrifying future. Again, this was inspired by Life After Google, a study that we did almost 2 years ago now, along with some of the stuff we've talked about with General Electric. I believe General Electric is well positioned for what's happening on planet Earth. And I felt the need to put Charlie Munger on the slide with Warren, and we'll talk
So
about that here in a minute.
is this an AI generated cartoon, Mark?
It might be. If Sean was here, we could ask him. I'm sure he would know.
Very, I really like it. So
Well, I used to walk by a ticker tape machine just like that in the Better Investing lobby almost every day. Good stuff. All right, so here is the portfolio we ended up with. What Ken and I thought we would do is just kind of walk through some of the companies that are a little more obscure. These are the 20 we ended up finally choosing. He did wrestle me to the floor and talk me out of Generac. That's not on the list anymore. And I get that. I think Generac is probably threatened by a number of things. It's just a matter of when and how much. Some of these other companies are basically displacing the need for companies like Generac, so we'll see. So from top to bottom, you see our 20 companies, and I think it's a pretty solid list. And again, if you compare this to the companies in the First Trust Grid ETF, Exchange Traded Fund, we basically picked from that list and tried to identify the best current opportunities among many on there. What are your thoughts of the,
so
just in general, Ken?
well, we've kept the grid in the group of 20 right there. I don't know whether I would have done that or not, but why not follow it since we're following everything else and see how well it does compared to how well the rest of the group is doing. This starts out with $100 on what date, Mark?
I'm thinking about making it June 21st, the solstice.
Okay, all right.
So
So
those numbers will be adjusted and they'll be finalized.
okay, sounds pretty decent.
Okay, now
I
the other
do
thing I
know
want
that
the audience to keep in mind is when we started talking about this, it's kind of inspired by this notion of trying to pick some companies in here that will win no matter who succeeds in various aspects of the the needs, the challenges, and the opportunities out there. And I think some of these are just perfect in that regard. In Amphenol, they just basically make things that plug into each other, and they're the best, probably the best in the world at it. So they're on here.
we're defining it pretty broadly too. We're talking about electrification, but we don't just mean the grid, and we don't just mean charging stations. We mean all this push towards electrical everything's and all the superstructure that's going to be needed to make this all happen correctly, whether it's direct power or alternating power or whether it's battery power. It's all going to be needed in one form or another. And we're looking at companies that probably can play an important part. I'm awfully glad that we did move towards a few of the biggies, because I don't think they're going to be squeezed out of the process. And I'm specifically talking about companies like Siemens and Honeywell and GE. I do think that they're going to play a role in whatever's happening as you move into this new electrical future, whatever it ends up looking like and whatever it ends up happening to be.
Yeah, and the other premise that we want to go forward with and make sure everybody understands, when you look at this dashboard and you cringe at a company like General Electric, this is here because we believe these are going to change, and I believe, and we might need a couple of years for this. Those numbers are going up. Especially after they complete all their spinoffs and everything. But the field of opportunity that they have and the excellence of management they've shown over the years, although they hit some speed bumps and a few brick walls along the way, I do think that's going to win out. And so that's just an example of, when you see numbers that low, we expect them to go up in many of those cases. So, again, from big to small, ABB, General Electric, Siemens, those are all big equipment suppliers. And we have the other end covered with things like Littelfuse. So should be interesting to see how this does. Anything else here, Ken?
Nope. I would like to come back and take a look at this in 6 months and see what it's done.
That's what we'll do. We were not going to talk about this one a lot. So we'll start with this one. This one's a little bit unusual. I actually presented it for the March 2018 roundtable. It was at a moment in time when the stock price had done a pretty good plummet down. So got it at a pretty decent price. It continued to languish down here, much like Generac did. But this is an example of a company that's doing something quite different. This is a conservation play. They basically come in and reduce the load on either a municipal lighting system or a commercial building by 40 to 60% just by replacing a bunch of bulbs and putting in some advanced control systems. So it's a pretty interesting play. I do think it's vulnerable to if we have an extended, let's call it a depression in commercial real estate, because they have a lot of commercial customers. Any thoughts on this one, sir?
Well, the thing that it doesn't say in the thumbnail up there is I think that they pay a lot of attention to. You said put in a light bulb, but it's not necessarily the kind of light bulb that we've thought of before. There's a lot of attention being paid to all of the new types of lighting that exist now, including the lighting that comes around these organic LEDs, these OLEDs, which allows them to put light where you never were able to put light again. I'll give you a 30-second demonstration or example of what I'm talking about. I watched a home improvement show where the homeowner vaulted their ceiling so that it was about 30 foot high, and then they used beams to cross the room to hold the room together. And they wanted to highlight the fact that they had used old barnwood up on the ceiling. And to do that, they routed grooves in the top of the beams and put a channel, a metal channel in that groove, and then put what looked like a piece of tape inside that channel, attached the end of the tape to a power source, and suddenly the room was lit with this soft light, which greatly enhanced the look, the cosmetic look of the room, but also gave them ambient lighting that they could walk around and use. And it all came with virtually no cost in power of any kind. It came from these organic light emitting diodes that you're beginning to see in places where before they were used for very specific applications like phone screens and televisions and things like that.
Yeah, we're looking at some of those kind of tape systems for the deck. So yeah, it's an interesting area. Just some
Yep.
amazing conservation numbers. I mean, they're just out there. So that's again, the commercial threat is real. So we'll keep that in mind. All right, here's Advanced Energy. The ticker symbol's AEIS, just to reaffirm that these guys are involved across the board in the areas that we find very interesting. A few weeks ago, we talked about the data centers at these major companies like Google and Apple. And these guys are leveraged right into that mix. So it's an example of a company that's across many of these areas of opportunity, and they're regarded as leaders, you know, at the top of the list in several of the areas that they serve. Any awareness on this one, Ken, or are we good?
Not on this particular one, but these data centers are just monsters when it comes to consuming power. I listened to Virgin Galactic people talk about building a power station up in space with solar panels and collecting the power that way before it had to go through the atmosphere, and then beaming that power with using microwaves down to Earth. Sounds real science fiction-y to me, but it also sounds like it probably can be done at some point, not 100 years away, but maybe in the foreseeable future.
Why am I getting an image of that satellite firing off target and melting my house? All right, here's another one. You want to talk about being supplying to many of these companies and certainly not being a household name. AZZ is the company and the ticker symbol. And this one is not a secret to many of the people in the better investing community. They basically make those pieces of steel and the coating for them. And you can see the various industries that they serve. Those are all obviously all extremely important. But again, as you see these fields of solar panels or various different types of construction that's related to transmission and distribution, all that sort of thing, these guys are there and they're making a bunch of stuff. I am actually kind of pleased to see that the return forecast is near multi-year highs. This one probably just jumped onto my short list for tonight, Ken.
Another company that does this exact same thing is BASF, Mark.
Mm-hmm.
They do an awful lot of sales of materials that are coated, used in heavy duty construction, including bridge work.
Yeah, and this again, you guys have heard this a number of times from me. When you see the earnings on a very favorable trend, and then the price basically stuck in a downward or flat channel, that just basically suggests opportunity. That is what's shown right here. Good stuff. So AZZ. So that's our first few companies. So we're a little ways down the list. So we'll go into the B's and C's. A lot of A's on the list. It apparently was helpful to start your company name with the letter A, Ken. All right, so here's our first one in the second group. This is one that Ken kind of pushes back on. This is BYD Automotive. The ticker is BYDDY. It is a Chinese company, and it basically can probably be best described as the Chinese version of Tesla. And I don't think that's too much of a stretch. They are fairly highly regarded in the development of battery technology. Charlie Munger, he's the second from the left, has been singing their praises for quite some time. And you can see the charts on the right. Rather explosive growth in revenues. Stock price has been up for a while, and earnings are taking off. So, again, I think it's just here to kind of double down on Tesla a bit, Ken. And I understand your reservations. But apparently these guys actually do have buildings that exist and products that are seen by people. So at least they have that going for them. No comment. You're just staying out of the discussion on.
I'm just gonna stay out of the discussion of this Chinese company. Yep.
All right. Well, onward and upward then. We put Cabot in the portfolio not because Cabot is incredibly sexy. They are listed as one of the companies that's in the realm of graphene production. We have talked about graphene fairly extensively here for a couple of weeks. I would just encourage you to do a little bit more research on it. It's a very fascinating potential, especially with respect to car batteries. The way I would nutshell it is I heard an industry expert describe that, again, the challenge with recharging a car on the highway and stopping at a gas station or now an electric station or whatever we're going to call them is that with this type of technology, it's probably feasible, I'm really hedging there, to charge your car faster than you can fill it up with gas currently. So that alone is enough for me to at least want to understand what in the world are they talking about, and it centers on this graphene product. Now, Ken, I know you've been doing a little bit more homework. What can you share?
All I can share, Mark, is that it's the material is known to people that are in the chemical industry. When I mentioned graphene, a couple of the guys in my investment club immediately knew what I was talking about. I'm getting some articles right now from a couple of journals that one of the gentlemen in my club gets. He was a vice president for BASF, and he gets a lot of reading materials still. So I'm going to want to read those articles and try to figure out what the material is, who's making it, and what kind of applications it seems to have. I like the idea that it's the thinnest, strongest material known to man. That gives me an epilogue for the idea that this might have a lot of uses that we can't even imagine right now.
Yeah, and there's certainly evidence in that. When you start doing your homework, you'll find people trying to use it in a variety of areas. So Cabot is in the portfolio. They make a whole lot more than graphene. It's just they're listed as one of the people that do it. So it's kind of a placeholder. If any one of these companies actually begins to emerge, I think one or two of them are publicly traded on that list on the lower left. The ones that are publicly traded are listed in some cases in fractions of a cent, and you guys all know what that means. Um, so we will be watching for somebody to come out. This Avidane that I talked about 2 weeks ago, a little bit last week. Um, it is a company coming public, currently private. I just can't figure out what systematic advantage they have. What's the opportunity? What's their special niche when it comes to that? So again, we'll be watching for somebody to emerge, but just be aware of it and be watching. And we will continue to do research. I would be stunned if a graphene related company didn't show up at the roundtable at some point in the future.
I'm excited, Mark, that if we're looking at a battery that is using material other than something that is very difficult to mine or to find in the whole earth or whatever, we're using graphene, which is a form of carbon. And if we can find a way to make this stuff and then apply it in battery technology, we're looking at a battery that can be made from, gee, carbon's everywhere,
Mm-hmm.
and we should be able to come up with enough carbon to make enough batteries at ridiculously cheap prices once the processes for making this material is brought to a place where it has uh, mass audience for it, mass sales for it. So it's exciting as far as I'm concerned.
Yeah, and
The old guy can still get excited, you know.
one last tidbit that again kind of resonates with me is this industry expert who was on a YouTube video. He could have been lying, he could have been delusional, I don't know, but he basically made the claim that a lithium battery that used graphene in the design of the battery was less likely to explode or combust into flames. So that also is kind of compelling. There's actually articles out today about lithium batteries and the dangers that can be associated with them. So good stuff. All right. Another company that made the list that's actually a little bit more obscure was Enphase Energy. It actually is a current selection by David Gardner over at the Motley Fool. That's all I'm going to tell you. You can go there if you want to kick things around a little bit, but they supply to a whole bunch of different companies, including Chrysler. That could be a picture from my garage. That is a Pacifica charger on the wall there. And these guys are also leveraged in a number of ways. That on the lower left there, they're showing you an electrical component that could be just as easily on the backside of a solar panel that basically integrates the solar panel and the output of that electricity with the alternating current grid that your house resides on. So again, all that stuff is connected. They make the stuff that connects and controls and protects from a safety standpoint these products. So a microinverter is just simply there to convert DC to AC electricity and provide a safeguard. Any thoughts on this one, sir?
I I like the concept. What more can you say right now, Mark? There, all of them seem to be at beginning breakthrough stages for some pretty dramatic kinds of ways to change the world.
Yeah, in fact, we're going to talk about a company that's doing some of the same stuff, but their focus is on the optimization. All right, so let's take a quick look at, well, here's one of those other companies right here, Fluence Energy. This was discovered through that grid exchange traded fund. And I'm just kind of intrigued by some of the stuff that they're talking about doing. This is kind of one of the answers to the question you asked about, is there somebody optimizing all this stuff and the communication between the residents and the utility and all that kind of stuff? And these guys are doing things which apparently increase the reliability and the performance of batteries, systems of batteries and that sort of thing. So I find them interesting. This is obviously by the lower right, a very early stage company, but if they pull this off, they have gone profitable. So they're into that. If they stay profitable, it'll be fun. If they don't, it won't be fun to own this company. Your thoughts, Ken?
Well, I've always thought, Mark, that if we're going to have these giant fields full of solar panels, or these acres and acres of windmills to make wind power and everything, that we need a reliable place to store this power. It can't just be fed directly into the grid. And this company seems to have picked up that niche and made a big play for putting these, for want of a better term, these battery farms all over near where power is being generated. I suppose you could put one right in your own home if you are generating enough power from your rooftop solar cells to end up selling to the grid or moving to the grid. So it's the right company with the right product in the right place. A lot of it will depend now on whether there's enough customers recognizing that it's time we had this kind of stuff happening, and whether the officers at the company have the ability to transform the idea into actual bottom line cash. It's always the problem with these small companies. You not only need the idea, but you need the leadership.
Yeah, and I would describe this as Sean Mesa's. He has the Tesla solar panels and the power wall. This to me is the commercial slash industrial version of that. And I would just add that systems like this can be vulnerable to technology advances and that sort of thing. So you do have that risk in something this big. I mean, this is a field of solar panels. I think it's in Australia. I don't know that for sure, but that's a
Len,
serious number of solar panels.
Len is telling us that this is called a Tesla Powerwall, Mark.
Yes,
So there's that name popping up again in a different application.
absolutely. And of course, Tesla is among the companies in that exchange traded fund. This is just your reminder of the performance of that collection of companies. The first company that they bought back in 2009 was ABB, or it was among the first group of companies that they bought. And the performance of this fund has outperformed the market by a couple of percentage points over that time frame. It's been a little bit hot. If I was looking to add this to my personal portfolio, I might just put an alert on and wait for a price closer to 90. And it certainly has shown the ability to make those type of drops in the past, and just an opportunity to pick up something like this at a better price. So just something to think about. All right. And now Ken has fallen in love with my mention of Hydro One. So again, go swimming in Niagara, but don't jump in any barrels.
Well, if you visit Niagara Falls, especially on the Canadian side, you can visit. I'm surprised, Mark, you have not visited the associated nuclear station that goes with the hydro station that's there at the falls. They do allow visitors into that nuclear powered facility as well,
Uh huh.
and it gives you a pretty good background on how nuclear power is created, how it's stored, and most importantly, the safeguards that are put on a nuclear power plant. I mean, short of war, like we're seeing in Eastern Europe right now, we've had a pretty decent run with the safety of nuclear power, and I think countries are finding that they can't go cold turkey on their nuclear power programs and still hope to provide power for the people that live in their jurisdictions. I think that's happening in Western Europe. It's happening in Japan. It's happening in a number of places where this uh, almost I want to use a non-inflammatory word. This almost rush to get rid of anything associated with nuclear doesn't ally with the idea that nuclear power is one of the cleanest powers we have.
Yeah. In fact, well, just to be clear though, their Ontario Hydro is split up into five pieces. I think the nuclear generation is part of one of the other five pieces. I did not dig any deeper to confirm that. These guys are principally hydro. I know that, but I would agree with you, Ken. I mean, just in general, it's something that needs to be considered. And as we promised, if somebody has a fusion breakthrough, that'll be here too. But again, all the stuff we're talking about with many of these companies, they serve all the stuff in that circle too. So this is clearly not a sexy recommendation. This, and when we put it in the portfolio, it's there for kind of a base load, pretty decent dividend, and very stable company. So we're down to
I
here.
Yeah,
Go.
I did do some investigation, folks, and at least the one broker that I spoke directly to for, oh, I don't know, a good 4 or 5 minutes, told me that while they were able to buy Hydro One for me, they were going to have to work through the Toronto Exchange to make it happen. They did not see a way that I could buy directly on an American exchange this particular company, that I would have to go through Toronto, and that meant fees associated with the trade wherever you seem to make it, if it's going to be through an American broker.
Yeah, and the one tip I would give everybody, if you want to check a different broker, I believe it's an ADR listed as HRNNF. That's Nancy Frank. HR Nancy Frank. And you might check and see if that is available as an investment opportunity. If you feel compelled. I don't think we need to be in any great hurry at 5.9. Again, it's in this portfolio as a reminder that hydro can be a very stabilizing and significant contribution. Again, with respect to those data centers and all that kind of stuff, definitely.
And we did note, Mark, that a large portion of that 5.9% par is in the form of a dividend.
Mm-hmm.
They pay a significant dividend.
Good stuff. All right, we've covered Littelfuse. Again, they're in all the electric vehicle charging stuff and just in a whole bunch of stuff. Every one of us has Littelfuse stuff either in our car or house or whatever. So they're everywhere. And Qualcomm, of course, is basically right up there with NVIDIA. NVIDIA is not on this list because of the price run up, but Qualcomm basically seems to be well positioned in some of the optimization technology going on, and so that's why they make the list. The next one on here was actually shared with the Better Investing Online National Convention by Susie Artsberger, and it's an interesting company. There's another Australian solar field there, Ken, down the middle of the page. And again, the notion that these guys are providing all of the gozintas, the gizmos that make this stuff all happen. And again, many times the stuff is not incredibly sexy, but it's certainly integral to a variety of systems, no matter who prevails, whether Tesla beats BYD or whatever. We're kind of cheering for Stellantis in this house, but we'll see. So, good overview. This is not a brand new company. It's been around for 26 years. Susie likes it. So it operates out of Portland, Tennessee. And these guys also kind of fill that role that we talked about a little bit. They apparently do development and basically engineering and construction also. So project management, if you want to think of it that way. All right. Good to go here, Ken. All right. And this is just that reminder that Elon Musk believes we're down at that inflection point between the solid blue line and the sloping blue line, dotted line. So that's just a reminder that this does the grid and the companies that are affiliated seem to have an interesting future, probably worthy of consideration for a long-term investing portfolio. Anything else on this, Ken?
Well, we've talked about Tesla enough, Mark.
All right.
I guess if it comes down to $200, I'll buy some shares of it. Okay.
Yeah, I own a little bit of Tesla, so full disclosure, but not a lot, not enough. I should have bought more. Coulda, shoulda, woulda. All right, so here, this is rapidly becoming, as you guys know, one of my favorite slides, just to demonstrate the advantages of finding better companies at better prices. And that's illustrated by the individual companies up at the top. And then we can just simply refer to this down here as Index Investing Village. Nothing wrong with 8 to 10% returns, but um, you can do better if you have the time and inclination to do so. And what we've done here is, as promised, embedded some of our model portfolios that we've followed for a few years, and just wanted to take a moment and step through a few of them. For example, starting at the bottom of these bolded selections, the bare naked million, that was the answer to the question back in December 2005. Actually, I guess it would have been 2006, right
2006.
around
Yep.
Christmas. Yep, right around Christmas that year, a gentleman called and said, if you had $1 million, what would you do with it? And that $1 million we basically put into a demonstration portfolio. It is now worth what you see here, 6.5 million. And last time we checked, there had been 7 selling transactions since 2006. So it's actually doing pretty well, despite being fairly dormant when it comes to that sort of thing. So here it is. This is the current portfolio. And basically what we did is we put half of it into Vanguard growth. And then the theory was we're just going to identify industry leaders when they go on sale and add them to the portfolio. So you can see that the original date is shown right here. The other stuff has been added. And it's been a pretty good run. So really, we just watch for industry leaders to be at the top of their industry with respect to their quality and their par, and then put them in the portfolio. And it's actually worked out pretty well over time. Any thoughts on this one, sir?
Well, I just want to go back one slide, Mark, and I can see some people that are new to the roundtable are looking at this chart and they're reading the last column on the chart incorrectly. The actual return, folks, is the third column in, the annualized total return. That last column is relative return, which just means that's how much it's beating the market. So if you're looking for actual annualized return, Apple, for example, has done about 25% a year since 1994, which means it's beaten the market by about 15 points on average year in, year out. So just make sure that you're reading those column headings correctly so that you're understanding what exactly the numbers are saying to you.
I noticed that I hadn't noticed until just now. Cognizant actually has bumped up into second place on their relative return, which is a lot of fun for a whole bunch of you in the audience. Good stuff. All right, so that's the outcome of the bare naked million, at least so far. I mean, I think we may challenge some of the companies towards the bottom. Certainly want to audit Oracle and see what we think about that, but this is obviously not very hyperactive when it comes to transactions, with 7 in the last 17 years. So good, clean fun. Here's the second model portfolio that we track. And again, it is beating the market. It represents the companies that appear most frequently on dashboards at Manifest Investing, starting with Apple up at the top. And of course, the news is that Google has moved into the number 2 spot, whether it's GOOG or GOOGL. It's up there. It hasn't quite nudged Apple from the perch yet, but it's coming along. And some very strong contributions from Visa, Microsoft, and whatever. Fairly well-positioned portfolio with excellent quality, double-digit return forecast down here. Love to see it a little bit higher, but we kind of like this. It's kind of a gauge of the type of companies held in our portfolios with real money, and there's some really interesting companies on here that have done well over time. And Ken, NVIDIA did actually make it into the group.
I noticed, I was looking at that. I'm surprised that Disney still stays in the group. I really am.
Disney has been plummeting.
Yeah, it's a problem child at the moment.
and for that matter, PayPal, I think it was added. I mean, it caught the interest of many of us for all the right reasons. Kim is probably going to bring PayPal tonight. Pretty interesting outlook for the future, but they certainly have hit a speed bump over the last 18 to 24 months. But they do check in here at 21st, so they have moved up the list pretty well. Just a whole bunch of stories in here that I could tell. I mean, even the Apple story. Um, Dan Hess recommended this portfolio back in September of 2005. Apple didn't even join this top 40 until 2009. And if you basically look at how it caught the interest of our community and held it over that time frame, it's really kind of phenomenal to watch that sort of thing in motion. So again, we consider this to be a interesting portfolio that probably is indicative of the type of stuff happening in your portfolio. So the fact that it is fairly high up this chart is a wonderful thing. Okay. Here's another one of our favorite portfolios. It's been around since the start of manifest investing. In fact, it predates it by a few years. I refer to this, at least in my head, as the Walter Schloss Memorial demonstration. He's the guy that used Value Line as a source of his ideas. He was a friend of Buffett, and you guys all basically know the story. Tin Cup has done pretty well, and the story behind Tin Cup is that it's basically taking and demonstrating what if. What if you took and invested the maximum amount you could put into a 401k and you were able to do stocks? Many people are. A lot of companies don't even admit it when it's possible. But if you could do stocks, what is achievable? And pretty fascinating returns over time, checking in somewhere in that. Well, let's look at the number. Tin Cup is actually checking in at 15.9 versus a 10.1 market. So beating the market by almost 6 percentage points. Now, the last couple of years have been kind of rough based on what you see here. All right. Here's a look at the portfolio. Again, we publish this every month. It's up continuously at Manifest Investing. You can go to this URL to look at it at any time. But many of our favorite companies are in here. Notice the Generac is being stubborn and staying in this portfolio, Ken. But a number of fairly interesting companies. I'm not so sure that America's Car Mart's going to survive much longer, but we'll see. We'll see.
Interesting that you've allowed Regeneron to stay in the portfolio, Mark.
Mm-hmm.
We hold Regeneron in a couple of my clubs, and we're having a real hard time keeping it in the portfolio right now.
Yeah, and again, it might be stubborn. It might be speculation. I just can't get what has happened with companies like Novo Nordisk and Eli Lilly. I mean, you can go back and make a case for not investing in those companies 5, 10 years ago. And what you end up doing is incredibly underestimating the innovation in their pipelines. And Regeneron has always been described as a company with quite a pipeline. So that's one of the reasons that it's held. It'll be held unless that number goes negative. It's probably going to stick around for a while. Just another consideration. And yeah, I'll admit I'm stubborn every once in a while.
And to quote a number of folks in my club that met last night, Mark, you don't need to have a bank in your portfolio. So.
Oh, oh, that's like rubbing salt in your wounds. Wow. All right, another one. We cover this every week, so here at Bull Sessions. So I'm not going to cover it other than to remind that the longer term performance matters. And in this case, even with that year we don't like to talk about, and we shall not speak of these things, we're still looking at 16.5 versus 10.4 over that time frame, and that's a massive difference over the long term. So we will continue to have fun. Please cheer for the portfolio between now and Halloween. And last but not least, this one really doesn't fit so much with the others. What's kind of fascinating here, Ken, is this one is not designed to do this. Over the long term, this one is not supposed to beat the market by any great measure, and it's at the top of this chart. That's just luck. fortunate occurrences. Things like South Jersey Industries being bought out at a pretty good premium since the day we started this, a little over 2 years ago. But again, about $9,000 into 5 utilities, a little bit of cash, and the whole premise of the entire demonstration is for the checkbook balance to stay above zero while every utility payment is made from the dividends in the portfolio. So what you're actually seeing here is the actual transactions for the first half of this year. Everything shaded down at the bottom is budgetary. So as long as this number in this circled green column stays black instead of red, we're going to call it a win. And it's one of the most interesting demonstrations I've ever been a part of. I just find it fascinating. And again, the genesis of this was Ken Janke trying to convince his father to re-enter the stock market about 50, maybe almost 60 years ago. The way he did that was to put together a portfolio of electric utilities that basically paid his monthly utility bill. So that's what we're doing here. And it's fun. Anything else on this, Ken?
No, this is one of the most interesting things that I've seen that we've, in my mind, that we've put together in the last couple of years. Mark, it's a great way to introduce people to stock investing, and it's a great way to convince people that think that the market is sort of like a giant casino, to show them how it has a practical application where if you want to take some of your stocks and direct them at certain goals, you can do it.
And one of the other things that we demonstrated was when this was actually purchased and taken away from us, South Jersey Industries, we moved the proceeds into this exchange traded fund, JEPI, JEPI. I had no idea what they were. And if you are not familiar with it, I would encourage you to Google it and experience what it is. We've simply included it here. It's forcing us to understand and witness this variable dividend, which comes from an enhanced strategy that basically is using covered calls to bump up the dividend yield on that particular investment. So you can follow along. They are looking at upwards of a 10 to 11% yield. And I don't know if they'll be able to maintain that, but again, it's kind of fun to watch and go along for the ride. We do have personal assets invested in it to watch it even more closely, Ken. We tend to pay attention when real money's involved. All right, so with that, we're coming up on 3 hours, or 3 o'clock, 1 hour. We do have the roundtable tonight, so you're invited to join us for that session tonight. A reminder that we do archive all of the bull sessions and roundtables at YouTube, so you can go check that out. And then I left in our orangey sky. That is not due to Canadian fires. That actually predated the fires and therefore could be deemed predictive, but please don't go there.
I will tell you, Mark, that this is very similar to some of the sunsets we've been seeing in the last couple of weeks.
Mm-hmm.
The smoke has made some of our sunsets just absolutely spectacular here where we're at in mid-Michigan. So
with that, any questions or comments, things we need to do, Ken?
no, we've stayed right up to date with everything else, and Len is telling us if you want to buy Tesla, buy some triple Qs. That'll give you Tesla exposure without owning the stock.
Yeah, and that's what we pointed out right back here.
Okay.
It's actually a pretty good piece of the portfolio. You'll also be buying Microsoft, Apple, and Alphabet.
Yes, you will. So with that, we can say farewell, and we'll see everybody. We hope we'll see a lot of you again at 8 o'clock this evening.
We probably should mention, because I think I forgot to as we started, we are going to take July 4th off. So therefore, that in addition to the Freedom Festival that Ken talked about between the United States and Canada, the Bull is beginning his July 4th celebration, and we will return a week after July 4th. All right, all set, Ken?
All set. We'll talk to you tonight then, okay?
All right, thanks, everybody.
Good afternoon, everybody.